Good morning, good morning. What's up? Sorry, I run into some personal stuff. So here we go. Quite a wild pre-market section. I took a long here. It was too quick. Only 5 micros. This one. Targeting these old highs. I was talking almost for 2 weeks. Posted my analysis today in the group. So I said this is a target. It will reach now. It's been reached, and we have a bearish SMT, as you see with ES, a daily level or weekly level, which is a high time frame one. So I think this upside objective has been met now for this week, because it's Wednesday. Expect a mid-week reversal, unless if you look at the the bonds. Like I said, if you look carefully the bonds, you will see whenever excuse me whenever they are buying the bonds, like these 3 days, like especially yesterday, you will see market pump one-sided without even any retracement. So we need to watch out, because it's a sensitive time now, because nobody is interested in buying US bonds. So they have to sustain, stability of the market, and they need to inject liquidity into the market behind us. So they won't tell us they're buying it, but you can see as the yield drops drastically, so some of the big money is moving the market. So hence the yesterday price action is quite wild. Now price is once it's reached the high time frame target, we will see immediately sell off, because the objective is there to sell at the highest level, not to buy at the highest level. Too fast, cannot chase this one. We have a FOMC minute at 2 p.m. today. So this another volatile day. I suggest you to trade low, trade size small, and maybe look at another asset. You don't have to trade NQ like all these ICT traders are doing, because ICT is trading at NQ, right? Yo, hey, what's up? I'm good. I tend to look at other markets. I don't really want to stuck in the one market. Some people say, yeah, you need to focus on one market. I don't see it that way. If you're able to read price, it doesn't matter. If you cover up the price exit and the time, it's literally, if you take off the name, the numbers, you literally are looking at the candlestick. There's no difference. Some of them may move differently, Now, this is expected sell off, but it happens so quick. You have no way to enter. You don't get any retracement back into this inversion. Now back to the daily open. If you look at the daily candle, sweep these 2 daily candles, right? Now it's coming back down to fill this gap. The Monday and Tuesday, like I said, it's tricky because we only have a half day on Monday and a whole day for Tuesday. So they combine 2 days of price action into one single daily candle. And these are the lows. In case I took the long during the before, right at the opening bell, I saw this inversion, a breaker, and once price traded back in, I long it in the small size, aiming for this high. Worked out pretty well. It was too quick. Too quick for me to call it, If it's a other asset class like BTC or Euro, I will try to call it. But for NQ, it's impossible for me to do a write up and then post it, and then it will be gone. The trade will be gone. You will be chasing price. Tap the daily open now. Also the previous day high. It's a sensitive area. If price wants to continue higher, it should not come back below here, because this is where smart money will buy below daily open, and we have fulfilled the whole open range gap. Now price aggressively V-shape recovery doing that, but only have a tiny inversion you can work on. Do we have a SMT? We're pretty killing it during the weekend with all these BTC long and short, really. The short I took, and the long, I think 3 longs. One early long, the one got stopped out before the pump. I can re-enter pretty much here during the Sunday. The first initial without this drop, with long here, previous daily high, come back, long again, previous daily high. It was perfect. Now price hitting this 1 hour busy. The order flow has shifted, so unless it can come back up and close above here, I won't consider it going any higher. It should go lower. 954 macro. Like this. 30 point too wide. Open range higher 20 points. Where's check the 5 minute. We have a 5 minute inversion here, the breaker. So yeah, okay. Somewhere here. If you enter here, you need to wire your stop loss at least this high, 36 point. It's possible. Try that. Wait for it to tap it. I think it's better off. See the 5, yes. Here. PPR here. Yeah, I think 2 more. Just above the inversion. This is 5:15. 5. We got a shift already. 15. Yes. It's the hour that I'm worried. The consequent question of this, which is here. This fair value gap. It may hit it and then come back up. Midnight open is the first area. I will take some off. It can come back up because it's almost closer to the midnight open. Like I said, the 1 hour busy. You should accelerate. You don't want to see it spend time coming out. I'm gonna lower my stop. You should do a one side trade, otherwise it will come back, bang around, and then you look for a re-enter. It should not close above the daily open if it's really bearish, because most of the work is done over here. So it's the matter of, does it want one more time come up and bump it? A very long time. I think most of the ICT trader will have the same answer. Maybe 5 years, 4 or 5 years at least. I think JCap, you know, the one that got 2.6 million payout, he he's been trading for 15 years. Yeah, and then take a long time. It's all about mileage, really. You have to read it in the right way, to read it every day and rinse and repeat every day. Practice in the right way makes it perfect, but if you practice in the wrong way, it makes it permanent, and then you're just gonna get worse. So make sure you're doing the right stuff, and then just doing the reps, just more reps. And I just also learn about not just the ICT, the technical side, also the psychology, the human psychology side of how the market works. Because ICT usually won't teach you that. It will teach you all the technicals, all the candlesticks, all the how the algorithm works. But really, you need to know how people works. This is probably coming up, tap my stop, but I already took some profit, so this should be a break-even trade. So managing your risk is the most important thing. If you are managing your risk properly, you won't be afraid of entering any trade, because you know that say you got 50% of win rate, and every time you are making a 2R trade, so you will be profitable in the long term, because every win you win 2, you only lose 1, so out of 10 trades you will lose 5 trades, but it's okay, because the other 5 trades you're gonna make 10, so in total you're gonna make 5. So why hesitate if you see a good setup and model? You should just enter with your proper risk management. Sometimes the trade you enter, it will give you more than 2R, because you will trail your stop to a 2R. Let's say if this plays out, it drops lower, I will trail my stop to here. So whatever extra I will get, then this benefit for me for the next one. You know what I mean? People don't get it because they enter randomly, with random size, with random stop loss. So today your trade you may get $200, but tomorrow you're gonna lose $400. Then it will never work out. And then once you hit 2 or 3 losses in a row, and then you hesitate, and maybe you reduce your size, or some people will increase their size, start getting emotion, and then that's the problem. That's how people get into trouble. Because without any testing, you have no data. Basically, you're entering a market, and everybody, the smart money, is trading with their data, and you are trading against them without the data. You're not going to win. I always say use the math to help you to beat the market. You can't use your technical analysis or your emotion whatsoever. Experience, yes, but mathematics is the one that will save you. A lot of trades you will find that like this one break even. It's okay. Yeah, not losing as long as you're not losing. But I got one in the early on. Yeah, and that's fine. Yeah, it takes time. Takes a long time. It's like passing. You know, you want to passing a challenge. It will take time. I know someone. You know, there are different type of ways to do it. Yeah, I know a lot of people will use the news to pass the challenge. Like CPI, they will go to one firm, buy. Say you want to buy 20 accounts from Apex. Actually, you can try that, but I never try that. I don't want to get banned. And then the other firm, I don't know what firm, they buy another account and just hedging against each other. But if they find out, you will get banned. A lot of people do that. They max out their contracts pre-CPI. You know, both firms go opposite side, one buy, one sell. But once you even say you got it funded, right? But it's not gonna last. Yes, it's a bit slower. It's good if you are new. You know, don't trade NQ because I think. Because ICT is trading NQ and a lot of ICT traders are trading NQ, and a lot of prop firms are promoting NQ. Even the prop firm owners, I think the TraderHoYin owner, he also trades NQ, and it become a trend. But to be honest, I don't like NQ at all. But because it's so volatile, it will give you quick results. 30 points, 50 points, that's all you need. For E-mini, 50 points, that's $1,000 already. So, which is really good. It will be delivered in minutes. Sometimes 1 minute will give you 50 points. ES is slower, but they still move the same. It's just the time illusion that you think it's not. See, because they are all exactly the same market, right? US indices, and they go the same way. And if you look at the ES 1 minute candle, it's very slow, and a lot of also give you a lot of false signal. NQ has a cleaner, to be honest, NQ has a cleaner candlestick pattern comparing to ES, especially during London. ES will have a lot of gaps and then a lot of I call that candle with devil's mark, which is not very good for trading. See the gaps here? Yeah. And ES will have a lot of volume imbalance, which will give me, if I want to trade this will give me headaches, because everywhere seems like a drawn liquidity, because lots of gaps. Okay, this is very choppy, and then a lot of buy stops. Left alone with buy stops. Really want to see this closing back below the daily open and the open range gap low. And I think trading is the ultimate goal, to be how do I say it? It's the way to financial freedom through trading. Is, how do I say, if you are low on capital, that's the best way, because nowadays you got problems, so you can leverage your money with a lower risk, because buying problem challenges, and they are very cheap. If you do it properly, then it's a good way to scale up, and once you're good, you're good, you get consistency payouts, you know what you're doing, then you can put your money into a live account, start trading, and then the ultimate goal is investing. It's not trading. You don't want to be stuck in front of the computer and the charts all the time, because this is still people say you can quit your 9 to 5 job, but we're still working, but in less hour. You can make more money, but with less time. But investing is your ultimate goal. But to get there, you need to start from trading. And I know a lot of profitable traders. Once they build up their accounts, they will start moving their money into investing, because for you got experience on trading, and you know how to read the market, and you know how to choose your assets, and you should be good in investing in long term. Buying stocks or buying ETFs, buying things that will give you interest, dividends, then let the money work for you instead of you sitting in front of the charts. So it's a different game, but that's the ultimate goal, and once you got the money from the investing, then you can start buying assets, in the real assets. I mean, not the one on, not stocks or ETFs. You buy actual, maybe gold, real estates, things like that, That's the ultimate goal. So to get there, start from trading. Otherwise, I think you can find another way. I think there are a lot of different people, can achieve this by, different methods. But I think, for me at least, trading is how I will get there, I think it's all about risk management, If you don't master your risk management, you cannot grow your account big. Even I give you like $1 million to invest, you are going to lose it very quickly, because your risk management is not right. Okay, price just keep wicking here. I want to see it go, with a displacement down. Tap that New York Midnight Open. See, we have a bullish SMT, so it doesn't look very good. Here, you'll see. Take one more off. Take one more off. So now, move a little bit. I think it will come up and stop me out. Anyway, doesn't matter. Let's see how Bitcoin's dropping lower now. Now, Bitcoin is dropping lower. I think once it's close below this daily in busy, you will start looking for this trend line stops. For a higher time frame, I think this up move is done for at least for now. No, I'm not the best. Sorry, don't say that. I'm not the best. There's so many good ICT traders out there. Just because the thing is, in the social media world, people doesn't like the real thing. They like the drama, dramatic, posts and videos like the gurus, because those people give them hope, false hope, dreams, things like that, they make it so easy. So because people don't like to learn in a hard way, all the ICT traders, the proper ICT trader, they know that it's very hard to become what they are. They work very hard. Still today, ICT hasn't revealed everything he knows, only a fraction of, because I'm sure he's got so many things that didn't tell us. But with only a few models, a lot of traders can be profitable and consistently profitable, but they all have to go through the back testing. You have to pick a model. If you say you like to use an inversion, then you need to go and back test your inversion model. But how are you gonna do it? Because a lot of traders or people, they try to learn ICT, the only thing they know is about fair value gaps, order blocks. They miss out the very important thing is the time. It's not it's the time and price. You don't look at time. All the price is nothing. It's just candlestick overlapping each other. This fair value gap may work for 1 minute, and then price will get through it and then stop people out. Then they will say, oh, the ICT doesn't work, because all the people are looking for, maybe they're looking for reversal. Like I first trade the ICT concept, I look for reversal all the time, and I found out if it's good to look for reversal when you are on, say, a ranging day, a seek and destroy day, you will be very good, because price is just ranging and bounce around. Once it take a high and then reverse, it take a low and reverse, then that's your day. But once you hit the day like yesterday, which is a one-sided market, and you will blow your account, because you will try to short it when it's going higher. Every down candle you will think is a signal for you to short, because price has already swept previous day high and maybe previous day week high, and then you think, oh, it's going to reverse, but it's not, it's going to get higher. Okay, then you wait maybe the lunchtime, there's a lunch stop hunt, and price will drop maybe 50 points or 100 points. You try to short it, but because you got stopped up so many times, you're so afraid, and then you get in late. Once you get in late, the price already moved like 50 points, and you try to short it, and then price reverse it, because it's a stop hunt. It's a lunchtime stop hunt. And what price did? They take out the earlier AM session sell side, whoever long did the pump, and then price will continue go higher, even higher during the PM session. So after 1:30, price will dip a bit and then sweep out all the 11 AM or 10 AM low, and then go even higher. That's how, if you are good in ranging day trader and you're really bad on the trending day trader, that's why you need to learn about time. Everything everything, every asset class, you have to work with time. People will think, oh, is it just macro time? No, it's you have the macro time, you have the opening time, market open time, the lunch macro, and each hourly open is the time, each 4-hour open is the time, daily open is the time, the New York midnight open is the time. Because these are the price signature, they are footprints. Like I said, here the daily open and the New York midnight open. That's where the daily candle open, right here, and it spent sometimes below during the Asia, the London, a dip below, come back up. Right here, accumulation. I think this is the manipulation up. Take out the previous old low, old high, and then sell. Distribution. So this is time, power of 3, right? And 10 a.m. you got the 4-hour 10 a.m. The 6 a.m. candle. This is the 6 a.m. high, which trick all the traders thinking we're going to hold time high and come all the way back down. And 10 a.m. we open lower. Now we have to see how this price using this 10 a.m. open, yeah, here. If this candle is going to print a bearish 10 a.m. candle, feeling this imbalance here, then it should not trade back up here. New York midnight open hit. Take one more off and move into profits. Now this low. I don't forecast price pivot, because it's hard to forecast where to pivot. Like ICT said, I don't pick tops and bottoms because I hurt myself doing that before. What you tend to do is, because we are human, we tend to repeat the things that is good for us. So like, let's say you trade the CPI, yeah, you probably come back, see that tap the midnight open, come back. You don't want to see price closing above the 10 a.m. open or the daily open. Is if this is closing above and the bullish trend is not finished, it's gonna probably take out the 6 a.m. high. Okay, and if say you trade CPI, for you are a CPI trader, every time you will guess where CPI will go, right? And that's say you got 2 CPI right, and you will do it the third time, and say you get the third time right, and then you do the 4th time right. But how about the 4th time you're completely wrong? Yeah, CPI moves so much in 1 minute, and that candle move 500 points. You blow your account because your stop loss won't get hit because of spread. So this is the problem. It's not about you predicting something right, you win. It's when you get wrong, that's gonna trick you. You know, it become a bad habit. So instead of trying to predict where price, you know, pivots, we go along with the order flow. We read how the candlestick print like this. We read how it prints, because we don't know when it's gonna turn. But price stop in profit, price will show its hand when the order flow has changed with respect to these opening times, you know, this level, because these are the liquidity here. You see these buy stops. Okay, it may come up and sweep these buy stops before coming back down. Look at this trend line buy stops. So many buy stops here. So I got 2 wins today. One from the opening, and the other one small position. Keep your size small, because you don't know when Trump's gonna tweet and they impose another tariff on some other country, and then you will see a 500-point drop or 500-point pump. So always use a stop loss. Make sure you put your stop loss reasonable one, not too narrow, not too wide. Trade half a size, usual size, because these nowadays the market is so crazy. This so short I was posting earlier, this is a quite simple one. Price hit this daily CB. You see this BPR. This is a market structure shift, telling us this is a 1 hour, so it's a high time frame. So pretty much the uptrend is done. This some consolidation bang around to trick people. These are the money. These are stops. People were longing this. The moon boys are, you know, putting the leverage up, longing this uptrend. Did one more sweep. You see no candle body close above these highs, or the wicks fell to close back above this 4-hour CB. That's your short. Target these lows. Any lows you would like to take profits. This one is easy. It's not, I didn't take it, but you know, this one is like very textbook short. The good thing about crypto is sometimes they are very slow, slower than NQ a lot. So you have plenty of time to enter, you know. But once they move fast. You know, they consolidate a long time, and then like this today, I did not even try to take a trade on the Bitcoin. I know, because you see these Asia highs and lows are intact. Even the London section ranging. We had a big range day yesterday, so people were eager to enter. London sweep the low, going higher. People thinking we're going to the moon. Price, look, price, what price did? Here. What's this? Daily open. Yeah. What's this? Weekly open. Yeah. I said probably smart money is selling. They're selling. If you read my Telegram, they're selling on Monday, selling on Tuesday, right? They start selling on Sunday. They sell here when it pump. The news. This is a fake move. Okay. They all selling above the weekly open. Now price coming down. So you need to know your the discount and premium, how to define it. With the weekly level, you start off with the weekly level to define your range. When you get your weekly range, then you know the daily range. That's all you need. All you need is this daily open. You anticipate where the daily candle will go, where most likely it will end up, and there's only two ways, right? You either go up or go down. By using the previous data, how price is closing, then you can pretty much nail the direction. And it comes down to execution. Is about practice. You don't practice your execution, you will never get it. Even though you know the direction, but once you see these type of choppy price action, you never know where to enter, and price will, when they start to chop, they will look like a lot of false signals. Come up again, come down, come up. Then if you are scared, you will stop out, or you're gonna close it too early, and then price move to your way, and then you start getting emotion because it's supposed to be a good trade, and then you exit too early. If you want to study ICT, you need to learn the power of three. Power of three is how a candle prints. Your opening price, this open, high, low, close, and the other way, open, low, high, close. That's it. Not like these people drawing boxes. I saw a lot of people like to draw 3 boxes to represent the power of 3, which is completely full of shit, really. Like this. This is not power of 3. They just hindsight, choosing cherry picking candlesticks. Pick a consolidation and then pick a manipulation and then say, oh, the price will go there, or price will do this. No, not like this. You need to use time. You can't just open, say, a lot of people do the Bitcoin, on a Bitcoin or on Solana, How do I do it? They will use like a 4-hour chart and place some boxes over the candlestick. That is so wrong. You never do that. You use time to do your power of 3. So for daily, you have the daily open, and then you look at the 3 section, the Asia, London, and the New York session. For the 4-hour, here is your 4-hour daily power of 3, right? That's your 4-hour power of 3. So you have a 4-hour open here, 10 a.m. open, and then this is the high. So you need to, whenever you think about this, you need to think, is this high is the 4-hour high of this candlestick, or if this is the manipulation, or this is not a manipulation, or this low is a manipulation, you know. And you need to use it with the previous candlestick, the 6 a.m. So we have a 6 a.m. low here. This is a 6 a.m. low. This one. Okay. So what price will do if we are thinking about this 4-hour, you know, PO3, price can do two things. They can open, you know, range a bit, drop, take out this low, and then reverse, right? Then you will see a long wick, take out this 6 a.m. low, and then drop, and then go for the high, finish in green. Okay, or open, trace up a bit, put a high here, maybe one more time, depending you got any imbalances here, maybe trade back to this inversion. What's the first percent of fair value gap anyway? Let me see. Oh, the 940 is first percent of fair value gap. Yes. Okay, so this one, even though it's an inversion, but it's a first percent of fair value gap. Okay, this can be traded back to. Okay, and form a wick, then that 4-hour consequent encouragement is there, is here somewhere. So should wick here, close back below here, and drop, and take out this low, right? Now it's banging around. Things like this is building more liquidity. You have a lot of trendline liquidity here, right? Because you see what pattern they're printing. See that pattern? Falling wedges. It's printing the falling wedges. So traders are expecting this, right? Break down. Or somebody will think come up, do a retest and go higher, right? There are a lot of different style traders trading patterns. These are trend line they're performing to just to get you to get into position, place your bets. You know, moving your stop losses above all these highs, below all these lows. But we don't do that. We look at this low here and the 6 a.m. low. That's the close proximity liquidity pool where traders long the whole London, you know, after the London sweep, they long. See that they get a free ride, a nice pump, probably aiming for higher price, this 26th of February high or all-time high. So stop losses are below here, sell stops. And also we have an old, this is an old gap. Yes, the new week opening gap. This new week opening gap is also going to act as a magnet to pull price back inside. Now we have this opening price here supporting the downtrend, this and also this. Sweeping these, then I'm looking at this imbalance, also aligned with the daily imbalance. try to rebalance the Monday and Tuesday awkward PA. I think it has to do that because Tuesday it did not do any retracement. Let me see. It did a little bit, yeah, a little bit, but did not tap the midnight open. You see, they left the midnight open. So I think likely this is the next target because 15 is already showing a change in state of delivery. If you are a higher time frame traders, this value gap, this candle should be shorted because hitting this 50-minute color encouragement here, aiming for these lows, and this has got big imbalance here, asking for another candle print. Once the price start trading below here, it will drop fast. That's like a low, very low resistance liquidity one. Now price is in the high resistance liquidity one area because this price action, back and forth price action, will slow down. Let's look at it. DXY reached this target from I think I did the market review. Hit as expected. Euro will drop as price. DXY pumping. Gold is ranging. Hit the high time frame target last week, so expect a ranging a bit before keep going higher. I think gold is gonna go even higher after this move. It's gonna go to at least this area, you know, this price discovery area. Once it's, you know, this is a market maker buy model. Don't short this. It's not worth it. Solana, nice drop. I hope you guys have shorted this. Now, price hitting this, like I said, the hourly busy. It's getting rejection. This is normal because it's hitting the high time frame POI. Now, you need to monitor how this 1 hour candle is going to end. You know, the next hour candle is 11 o'clock. 11 o'clock, that's tend to be a reversal hour. So yeah, watch out for that. Now price is coming back above the New York midnight open price. You want to see price trading back below the New York midnight open. You don't want them hang around, start moving higher. Then your next target will be the first percent of fair value gap. If this hourly candle cannot close, like very bearish, the feeling the whole hourly BC. I'm pretty bearish, but things is the NQ loves to come back, retrace it like 80% before it start going to your direction. You know, he will make sure, you know, NQ will make sure stop everyone out first before really move. Because I had experience before, you know, shorting right at the top. I know I picked the top, you know, like long time ago. Yeah, though shorted and then moved like 1,000 points. Oh, I took some profit, but I did not fully close it. And then I opened a hedge because I was trading CFD. That back in the times, I opened a hedge. When price found the bottom, I long all the way back up and closed the long, and the short, I almost hit my entry, but before it hit, I closed it. As soon as I close it, it dropped another 1,000 points. So you see, you get the picture. It will move back to your original entry and then drop, you know, do the real drop, mean the one that will never come back. So yeah, so watch out. Now this is better. Now it's closing back below the daily New York Midnight Open. Really, it's going to go lower now. Let's see if we get SMT. Yeah, no SMT yet. But I don't like ES. Is the trend line liquidity is so obvious. This is so obvious. This drop is too engineered. You know that? Look, too good to be true, right? Sometimes things are like that. There's no bearish SMT and, you know, local ones. Let me see. Okay, that got small one in the 10 o'clock. Small one in the 10:15. The SMT. That's it, really. I'd love to see one more sweep, and then that would be much better. To go even lower. Now is to drop from here. It will be much more like an engineered drop. Maybe take out this and sweep and then come up with a wick. You know, don't know. As time coming closer to 2 p.m. price, you will see price start slowing down because they're all waiting for the minutes to come out. We all know what minutes, you know, it's nothing like the press conference, but it's just another excuse for them to move the market. So avoid anything before 2 p.m. Wait for maybe 10 minutes, 15 minutes. For the minute, you should be saying no rate cut until, you know, blah blah blah. Expecting to cut rate, when to cut rate, things like that. It's nothing new. We all know. Now another balance price range here, small one. So see how price closes here. It's only 1 minute, and this for hourly candle is getting rejected now. If it close above this consequent encouragement, and then the next one will open higher and maybe go higher, take out this 10 a.m. high, which is here. Now you have a small inversion. The price stopped right before the London low. The ES sweep. Let me see. I mean 6 a.m. low. No. So for price, you know, if you're thinking about price will come back up, this is the time. Sweeping the low here, yes, and then form a bullish SMT. Then we'll see price start moving higher back into the range. Maybe here. Because that low is still quite far away for, where is it here, for NQ. Yes, it's closer. Almost gonna tap it now. If you sweep it, then it will retrace. Be right back. YM and ES swept the low. Yeah. Okay, see that NQ is start getting rejection here. We going to form a retracement. Doesn't have to be reversal, it can be retracement back to the range equilibrium. So much chop here. Nice drop. Take out this high low already. Previous day low. The Solana. Previous day low. You want to take some profit and then move your stop lower a bit, perhaps to this high here, you know, and just let it run. Going lower now. Don't think it has any interest of retracement. You can use a 4 hour. Let's just stop. Maybe here with 1.5 R. If you are your higher time frame traders, you can widen your stop at this high and then short and aim for this low, really, you know, because we have a SMT right there and new week opening gap rejection. So basically it's like this, you know. Something like this, or even lower like this. If I used to do, you know, back in the old days when I trade CFD, I would split my orders in ladders, like maybe different size. My invalidation is here, and you know your risk. Say your risk is $500. Then you have a small size here. You enter now. If price ever come back up, you enter one more with slightly larger, and you will have a larger size up here, and your stop loss is here. But overall, you are risking the same amount, but I just have a ladder order. Because back in the old days, I don't trade like, you know, using 1 minute with ICT model. And if it's not ranging and trending, then usually you get a small piece. But it's still good one, you know, if it's because it's a higher time frame and you can hold it. You can hold it for days, you know, like a swing trade. Then you can hold it for long like this, and then you can pyramid your trade when the market start doing this, like market maker sell model. So whenever retracement, you add a small bit. Whenever it retraces, you add a small bit. Once it's go below 50% from your TP, then you stop adding. Adjust your stop loss when price moving lower, you know. There's different ways to trade this. It's really now just a matter of time. I'm gonna take out this low. Nice drop. 170. That's $2 drop. $4 drop now. Let's see. I set the Trump coin. There's a lot of opportunities on the Trump coins. Okay. take out these equal lows. Definitely. Because for, I don't know, you guys trade crypto, for 10x leverage, they only give you $1 room for liquidation. So if you're using a isolate what's it called, the option, which is you only lose your money in your contract, not your whole account. Okay, and then they only give you like $1 room. So this, for people who long to 12, maybe 12.5 dollars, their liquidation point is there. So it will come here and liquidate them, even you are only using 10x. Not saying those 20 and 50x, they will be here. You have stand no chance. These equal lows, there are a lot of high leverage traders here. They will get liquidated. Once price tap into this 4-hour busy, you can look for longs. Because it's a Trump coin, right? He won't, I don't think he will let this become a garbage. He will somehow pump it back up, and then he can brag about this. Oh yeah, look at me, you know, I make people rich, you know. So maybe $30, bit optimistic, right? Around 24, something like that. But definitely these equal highs. These equal highs will get taken out. Once this trend line broken down, people were shorting this. I don't think it will go to zero. It will never happen. You know, as long as Trump is the president, he won't let this go to zero. So as low as he can go is 10. And then maybe you have a stop loss right there, and then you aim for this. It's good money. That's like $14 room to, you know, to go up. Once it's if we want to go up, it will go up fast, because you see this accumulation here. Accumulation, this is manipulation, right? Come down, grab more people selling low. Retail traders love to selling low. They sold their coins low, they bought it back and start accumulate more. And a lot of traders, their stop loss there till they want to buy lower. And then once it's slowed up, it will go higher. Trust me on this. Because all the coins are doing this. The round, you see the round? Very curvy shape. It will go back to 78. But I don't think it will go back from now, but later. But this big daddy has to pump, you know. Before that, nothing happened, you know. When it's dropped, it will drag everything down. It's the market cap of the Bitcoin. So this daily candle coming down. Still not taking this low. Teasing people. Okay. YM, not yet. So I don't like this trend line at all. It's just not. You need to watch the dominance and the ETH. If ETH is not going to 4K, the alts is no, it's not going anywhere. Because the money is still in BTC. Look now, the slow time frame change in state delivery. Start hunting this trend line stop. this line is too clean. Look at this. This is almost like a look. People trading trend line there, they are laughing now. You know, break out. You know, they long. Wow, good. Look, long stop loss here. Right, cool. Retest and go higher. Sometimes price will do this, not all the time. This 1 hour, because it's 11 o'clock, like I said, the 1 hour candle open. This can be the manipulation of the 1 hour candle, so watch out for this turn into a big wick. And once it start trading below the hourly open, which is here, the 1 hour power 3 will happen, and you will see this all just manipulation up, wick, come back, close below and go lower. As long as this is it will stay above, and that's fine, because we have a bullish SMT here. You can say this is turtle soup. Yes, the ES on ES, you will find a turtle soup. It's about sweeping a major low or higher, you know, and then enter there, like here. Price automatic, you know, dramatically turn, and then you enter right there, you're long, regardless of what is. Don't even think about the structure, just long and stop loss place below this low and go for an obvious high. I mean, if you are trading crypto, you need to look at a few things: the USDC chart, the Bitcoin dominance chart, the total 1, total 2, total 3, to know where about the price, you know, Bitcoin dominance. Ninth of May, it dropped at one time when ETH pumped a lot during that time, which I longed it. I shared it in the Discord. From 1400 to 2400, yeah, like almost 1,000 points. But now start trending again, you know. If Bitcoin is not coming down, then the altcoins is not going to perform at all. You may get some meme coins like occasionally, you know, pump and dump. That's all, because the volume is so low, they can be easily manipulated by, you know, little amount of money. But if you look at these top 100 coins, they're hardly gonna, you know, it's very difficult to move. So yes, and let's see, total 3, that's excluding Bitcoins and ETH. If you look at the chart, you will see it's not looking so well for the alts. Basically come back up, sweep the high, turtle soup, performance consolidation, failed to take the high. Now it's breaking down. Once it's close it up below here, you're looking at trading below. Then once this break down, then all the old coins will bleed heavily. Looking at this low here. So yeah, no position on alts. So I don't trust this pump. You know, this 1 hour candle fell at the consequent crashment of this 1 hour busy. So once price trades back below this 11 a.m. open, we start to expect to see lower prices, then trade lower, and that will be the end of AM session. Eve charts. I don't use the Ichimoku card, you know. I know a lot of people use it, you know. There's different way to trade it. I know a lot of different ways to trade. In terms of, you know, the how's it called, the crypto. If I want to trade long term, I buy spots instead of trading preps. Mainly for preps, I trade it for, you know, like a day trade, or like the one that I shared during the weekend. You know, just a quick, you know, 2 to 3 hour. You know, won't hold it for long. If you're looking to buy spot, that doesn't really matter where the price is going, really, because say you bought the ETH at 1400, then it doesn't matter. When it come back down to 1000, you buy some more. Come back down to 800, you buy some more. You know, just load it up. You can buy even more. You know, as long as you're buying the good, you know, buying the good old coins. You know, not those shit ones. I got one tip to look at the long-term market. If you pull the BTC and the ETH weekly chart, and you will find that every time they make a big move, there was a SMT divergence, either on the low or the high. I shared this long time ago. I just don't want to find it now, but I shared it a long time ago. So every time BTC make a lower low and the ETH failed on a weekly level, and then you will see after that they pump, you know, so much. And then once BTC or ETH make a higher high, one make a lower high, and then the trends start to change. But that's on a weekly level. To just rule out the noise, you know. Daily level, you can still see it. So total one, total two, total one is better. Look, because it's got BTC. See, I have a this before this move happened. Basically, is this determine the pump from the market? You know, the market make a buy model. you can still apply on this chart. And now it's coming up, forming almost a shift. Once this candle closes below here, inversion, come down, take out this low, maybe trade it back inside here, find some support and go even higher. No, this is not, this is a I'm not going to long this, I'm going to short this like this. Stop above the inversion. This 1 hour candle fell at the 1 hour PC, and then once it's closed outside, this is inversion. Just take reading, don't enter, because the bullish SMT is still intact. So unless you see a bearish SMT, we got one here. Oh, actually, we got one here. But that's on a 5 minute. 15, yeah. There's one more. YM is trading lower now. It's already heading lower. So I think NQ should follow. But how high it will retrace is a different matter. This consequent encroachment should not, it should respect this consequent encroachment. There's a devil's mark. Yeah, this 15 minute has a devil's mark. So this whole thing is a manipulation. I'm gonna move the stop higher, just in case. YM is already moving lower. ES is holding, but there's a breaker here. Bearish breaker. Retesting the bearish breaker. Don't think it come back up. It shouldn't come back up if there's a. If this is a bearish SMT. Nice drop on BTC. Very powerful day. PO3. Yields are going back higher now. See how it closes. BTC. So BTC now is hitting this daily discount week, the consequent encouragement of this discount week on Sunday. Usually I don't think Sunday low is not a safe low, so I think Sunday low will be price will sweep it. But other than that, that's pretty much a daily range. I don't know, today is not very volatile. Maybe 2 p.m. when the FOMC minutes come out, it may go even lower. No, who knows. But the next level, once price traded below this inversion value gap for daily one, this is a very strong PDRA, and price traded above the weekly open on the earlier week, then you will see a reversal during the midweek because they want to sell above the weekly open and the daily open if price is bearish. So now this is a very bearish day, so perhaps the first day we will have a first day even lower. Of course, the first day daily open will maybe open up here somewhere, and then you will see price trade slightly back up, but not going to trade even higher than this, and then just will wake, come down, and close somewhere here below, depending on do we have anything bad news. But that should be the draw, because the price pumped so much without any retracement. All these lows are sell stops. For price to really drop hard, price has to take out these lows. Then I think yes, those this low, so many people will start thinking, oh no, I will sell here now, and a lot of longs will be closing here. It's probably come down and then force them to close. A lot of people are thinking, like they're thinking, should I take profit, They will think, okay, they long all the way up. Now they start to think, oh, okay, should I close it? Should I sell it? A lot of, going on in their minds. So once they saw something, a drop or things like that, they will start try to get out, And I think smart money already offloaded there. They only sell high, and then they will buy it lower. So I don't know how low, but they will want to buy lower. So they will push the price down, force people to sell lower, and they will buy back lower. If I said it before, I want to see Eve to break the retail bull flag to go lower, but it's still staying here. Look, it's still holding up, even though BCC start dropping. Don't like it leaves this equal highs. I want to see it sweep it, fell back inside the range and go lower, take out this. So take out the short to go lower, sweep out all these longs, then nobody's left, and then they can go higher. So I'm looking to buy here. Because this is a market maker buy model. If you look, market maker sell model, so market maker buy model. Where will it finish? It will finish up here. I will sell, once I buy long here and then get out from around just before 4K. That's a swing trade for a long time. It will take weeks. It will take weeks. How long does it take to drop from 4 to, how long is it? 4 months. So expect to take another August time, July, August time to get there. Maybe July, maybe pump a little bit quicker. I don't know. Somewhere around there, summertime. What if the current range go high? Just cap this, start suppressing price too. Yeah, of course it can get, they like to get the range smaller and smaller, they just doing the, like the wedge or pennant, whatever you call it, just to build up more position, and then for sure they will take out both sides. So if it wants to go higher, it will go up first. It will go up, trigger people to FOMO into long, and then trigger people to short at the highs, grab the order to sell, sell it down, and then they are waiting here to pick up the sell order. They want to buy lower, so they will have limit set out below. People start selling once they see price dropping, and then they start selling into the big hands, and then once they're done accumulating, and then shift up without coming back. Price just ranging. Okay. Now the bullish SMT is intact. That means 11 a.m. likely to see coming up. Want to see is really sweeping this 10 a.m. high. If not, your price can't even get back above daily open, and the 4-hour open is still gonna go lower. All this is just a manipulation. That's the when price start trading back below here, then we'll see this low got taken out. Watch how price close below or above here. If it want to go higher, it should not have any interest coming back down now, because it did the job, sweep the low one more time, come back to this BC, close above the midnight open, market structure shift, retracement, the breaker. So all these bullish PDOA should be respected, but no, now this is not not very good. Yeah, this is not very good because it's traded right below meaning it's not respecting any bullish PDA at all now. You're using this as an inversion. There's some minor sell stop here versus all this is just manipulation. We accumulate. So if this accumulation is done, the second stage delivery will happen, and I think it's here. Because you have the 15, you have this inversion. 1 hour, you got this as an inversion. All highs swept, prices below the opening range gap. So all this point to the downside. YM's lower, yes, making lower lows. Only NQ is doing, opposite. Coming back above this. So I don't like this one. I don't like trading NQ at all. But people love that. See how good BTC was? Look, easy, yeah. Tap the daily open, sell off, not even looking back. No chopping, and then false breakout. Come back up. It will grind. When it start grinding lower, it will just keep bleeding. If it's a fast move for BTC, it dropped fast like yesterday. Like this one, I call this short. I said the midnight open somewhere here. I said, take profit at midnight open. Move stop. As soon as you enter, you move stop loss to break even, and take profit. And look what happened. It come back up, and I said long. Once it's closer below, above the daily open, long, and almost hit the previous, hit the previous daily high. And then I exit most of the Polish position and move my stop to the break even, and then come back and stop me in profit when I was sleeping. And this one same, saw a fast drop, come back up, just long, basically just this is a stop hunt. This is so obvious. Price went below the previous daily low, come back up, a market structure shift with a fair value gap, and where it's going. It's going for these highs, and we're just long. Don't even look back. It's so easy. And one more during the weekend. We got 2 weekend trade. One this one. 2, And look, NQ is doing this. Fucking hell. Look, chop. And people blowing accounts on this 1 minute candle, See that? Come up, tap this inversion, 4 hour open, fail to close, fail to go above the opening range gap, fail to go above the daily open, close below the inversion. Then this is a short. 11:30. Try one more time here. Short. Stop loss just about this. This 2-hour trade may come back up, stop me, I don't care. That's the thing, you shouldn't care about this. You should stick to your model. You know, I got the daily open above price, 4-hour open above price, inversion feather 2, inversion feather gap, change and stay at delivery. Failed to take out the 10 AM high. Got an obvious liquidity pool below price. Then you just take it, you know. There's no hesitation. Once price traded below this new midnight open price, I move my stop a little bit lower. I should at least tap the 11 AM open. Maybe sweep the 6 AM low and then reverse. I don't know. But it's all about managing your risk. Midnight open, tapped again. See, it tested so many times today now, and I think it's gonna fail unless it's come up. Stop me out. See how we avoided all this chop without getting chopped up, you know. Even though some people will say, oh, we didn't take any trade, we took one here, but all that, you avoided the loss, the unnecessary loss here, because losing to a chop like this is going to mess up your mind. You don't want your mind got messed up by this price action, because it will get you emotional. You want to get back in straight away if you get stopped out, and then you start realizing you got stuck in the mud and you can't get out, and got chopped up, you know, left, right, and front and back, you know. Then you will start getting aggressive. Let's see this. At least now it's a nice closure below the inversion. I don't want to see price coming back up. I want to see it close below the midnight open. Once it's close below the midnight open, then I more for sure it will go and take out this low. I don't want to see come back up and take out a 10 AM high, which is not good, but sometimes it likes to do that, and will drop during the lunchtime. Then I don't have the trade. It's okay, but you need to bear in mind that the scenario is not coming back up. once this candle trade back below here, take out this low, I will move my stop up right above this inversion, because it shouldn't come back up at all if price is going down. So either way, if price is going back higher, go down, manipulate and come back up higher, then I'm wrong, because it will go even higher. So I can lower my risk a lot, like half, by just doing that. Maybe price is just ranging a bit until the FOMC minute. I don't know, maybe. I want to see take out this before the news. If not, then this one will stop out, and then no more for today. See how this goes. Coming back up. Closing above, not looking good for this one. Let's see, it fails. Yeah, one more PDOAs here, last line of defense. Another this one. Reducing some risk. $80, it's okay. when it's chopping, it's like this. It looks so good 1 minute, and then looks so bad in another minute, driving people mad, so you need to be very patient, calm, just stick to your model. BTC is getting some reaction here with this discount wick CE look, so maybe not yet. It's not yet. It's waiting for the news. Can come up, tap this high time frame PDOAs here, and then roll over, maybe depending on the news. This one is still banging around here, not really performing. YMs keep moving lower now. ES is not looking so bullish, so I think it will drag the NQ lower as we have a SMT. Bearish SMT. Really don't want to see price come back one more time, then they will use this as a breaker to go higher. We want it to respect the bearish POAs. Now back to this inversion again. These sell stops, people are looking for long. The stops are right here. Once start price, once price start closing below the mid open, then yes, these lows are next. But it still doesn't want to move lower. Yeah. Very painful to watch this thing. It's so slow, so boring. Should not get any candles above or back inside the inversion. That price range is pretty much balanced. You see that all these back and forth candles, this is a balanced price range. So for price, it should have no interest going back above there, and only want to go for the next liquidity pool, which is, I think, is the low. $10.50 11:50 macro time. just not moving. Maybe it's because the news, so most of the volatility dies out. Coming back up again. No, I think they're waiting for the news, the 2 p.m. news. Right? Nvidia earnings is aftermarket, so there will be a big God candle aftermarket. Yeah, but usually that God candle will get rebalanced later. Anyway, you know. Nvidia won't miss the earnings. I don't think it. I think it should be good. So they should bring the price lower to pump it back up. That's what I think. Okay. Let's see. Okay, going high now. Hopefully it won't work this time, this one. Maybe range, keep ranging. Just stop out. Anything can happen with the news come out, you know. We never know. But there's a gap here on the 20 years bond. The gap up. So expect come back down. There's a SMT as well. Look at that SMT. It works on the high time frame level. On the SMT, on the yields and bonds, it still works. BTC, no, one lower now. This, I'm still in. This is really funny. Yes, coming up, yeah. If he is turning, then NQ will follow. No. Nothing will replace the dollar. Oh, that's a drop. So, no, did that stop me out? So I just whip this turtle soup. These guys who shorted there, trick them, now drop. People saying Bitcoin, so good, so well. It is very always a dinosaur tech, right? You look at it. It's from year 2008. Now it's 2025, and in the age of AI. So that thing is fucking slow. If you want to transfer Bitcoin, it takes ages. Even back then it's slow. Now it's even slower. And none of these crypto have any, use case. It's just another asset for people to transfer wealth, really. And now it's because this becomes a ETF. Of course, this big institution going to, repackage it and then marketing to sell it, because they can earn their fees and commissions. Like Michael Saylor, he of course is come out every day and advertise Bitcoin because he holds loads of Bitcoin, and he use almost all his Bitcoin as a collateral to borrow money, right? So if keep Bitcoin drop to zero, then he's probably fucked. So he is the one that will keep coming out and advertise, But to trade it is no problem, no feelings. Just trade the chart. It go up. That's what we want. The volatility. The more people trade it, more volatility, and bigger the volume, the better the price action. Less scam wicks and pump and dump thing. It's better for us, really. And shorting from now is not really a good thing, like most of the coins are still very low, and like all coins, if you want to short it, the limited, against the unlimited, you see, the skies is the limit. If it's want to pump, it's no limit, but if you want to short, there's only a certain way, like a coin that is like $1, if you can short it, where is it gonna go to 0.01? Not a lot of room for you to short. So if you're holding spot, you can short it for a hedge, like a hedging position. Like if you don't want to lose your value, if you're very good at reading charts, so if you're holding a bags like really low, you bought it like very cheap, like long time ago, then once price it at certain highs, and you can short it. Of course you can short it to hedge it, to make sure you got some profits, you know. When the old coins are at all-time highs, that's a different story. You find those project which is not really a project, and you just short it because they're not going to sustain. They you know, the so-called the founder or those people behind the team, you know, they are going to be the one that sell it at the very highest point, so price will drop a lot. Now this is not, don't want to see this coming back up. I'll lower my risk a little bit more. I want to see a flush down. This thing is taking ages. Only sweep this low. Did not give me a full sweep on the 6 a.m. low. It's not very good. This one probably won't fail. Let's see if this can fail, but I don't think it will fail. I will think it will just punch through this. Because it's 12 o'clock already. See that? It's not good. It go up higher. Find some sell stop. I'll find some buy stop. We'll go through here as well. Spooling higher. Back to 10 a.m. open because it's lunch macro. And that's all for today. I think you guys try not to trade the news and wait for the news, and then maybe 2 p.m. it will go lower, or maybe it's done for today. Thanks for joining today, and if you please smash the like button. If you want more question, you can go into the Discord and drop me a message. You know, I always there, and anything I try to answer. You know, if you got charts you want to look at, just send me the charts. You know, I don't mind. Okay, that's all. I'll see you tomorrow, and bye now. Bye bye.